On February 24, 2025, Apple Incorporated made headlines with a landmark announcement regarding its commitment to invest over $500 billion in the United States over the next 4 years. This unprecedented initiative represents Apple's largest domestic investment to date, reflecting the company's confidence in American innovation and its strategic focus on enhancing artificial intelligence, AI, silicon engineering, and advanced manufacturing capabilities. Overview of the investment. CEO Tim Cook articulated the company's vision, stating, "We are bullish on the future of American innovation and we're proud to build on our long-standing U.S. investments with this $500 billion commitment to our country's future." The initiative is designed to create jobs, foster technological advancements, and strengthen the U.S. economy, which has been a long-standing goal of the tech giant. Key components of the investment. 1. New manufacturing facility in Houston. One of the most significant aspects of the investment is the establishment of a new manufacturing facility in Houston, Texas. This 250,000 square foot facility, set to open in 2026, will focus on producing servers for Apple Intelligence, the company's AI-powered personal assistant. The new facility is expected to create thousands of jobs, further solidifying Apple's manufacturing footprint in the U.S. 2. Doubling the Advanced Manufacturing Fund. Apple announced plans to double its U.S. Advanced Manufacturing Fund from $5 billion to $10 billion. This fund is aimed at supporting domestic manufacturing and skills development, with a particular emphasis on silicon production at TSMC's Fab 21 facility in Arizona, where Apple is the largest customer. This expansion reflects Apple's commitment to fostering innovation and creating high-skilled jobs across America. 3. Job creation. The investment is projected to generate approximately 20,000 new jobs across various sectors, including research and development, R&D, silicon engineering, software development, and AI. Currently, Apple supports around 2.9 million jobs in the U.S. through direct employment and its extensive supply chain. 4. Apple Manufacturing Academy. To further bolster U.S. manufacturing capabilities, Apple will launch the Apple Manufacturing Academy in Detroit, Michigan. This initiative will partner with universities like Michigan State University to provide training for small and medium-sized businesses in AI and smart manufacturing techniques. The academy aims to equip workers with vital skills and improve productivity in the manufacturing sector. 5. Expansion of R&D investment. Apple's commitment includes significant investments in expanding its research and development capabilities across the U.S. The company has nearly doubled its U.S.-based advanced R&D spending over the past 5 years. This growth will focus on areas such as custom silicon, machine learning, and AI, reinforcing Apple's position as a leader in technological innovation. Strategic implications. The announcement comes at a time when U.S. tech companies are increasingly scrutinized for their reliance on overseas manufacturing. Apple's $500 billion investment is seen as a strategic move to diversify its manufacturing strategy and reduce potential vulnerabilities related to tariffs and international trade tensions. Analysts have noted that the investment aligns with political themes surrounding American manufacturing and innovation, particularly in light of past discussions with former President Donald Trump regarding tariffs on Chinese goods. Timeline of events. February 24, 2025, Apple formally announces the $500 billion investment plan detailing various initiatives and the expected job creation. 2026, the new manufacturing facility in Houston is expected to commence operations, producing servers critical to Apple's AI initiatives. Conclusion. Apple's ambitious commitment to invest over $500 billion in the U.S. is a testament to its dedication to fostering innovation, creating jobs, and bolstering the domestic economy. By enhancing its manufacturing capabilities, expanding R&D investments, and supporting workforce training, Apple aims to maintain its leadership in technology while contributing to the growth of the American economy. This strategic initiative not only represents a significant financial commitment but also underscores the company's confidence in the future of American ingenuity and manufacturing. The content presents several counterintuitive insights regarding Apple's substantial investment in the U.S. economy, particularly in relation to the prevailing narratives surrounding tech companies and their domestic operations. Here are some observations that may seem contrary to expectations. 1. Massive investment amidst global supply chain challenges. Typically, one might expect a company like Apple to continue leveraging lower labor costs and less stringent regulations in overseas markets. However, Apple's commitment of over $500 billion to domestic investments marks a significant shift towards strengthening U.S. manufacturing capabilities, especially in an era when many tech firms are increasingly reliant on foreign production. 2. Job creation in a high-tech environment. Many might assume that as technology becomes more advanced, job opportunities would diminish due to automation and AI capabilities. However, Apple's investment is projected to create around 20,000 new jobs, primarily in research and development, R&D, silicon engineering, and software development. This indicates a counterintuitive trend where advancements in technology are simultaneously fostering job creation in specialized fields rather than displacing workers. 3. Increased focus on domestic manufacturing. Given the globalized nature of supply chains, Apple's decision to establish a new manufacturing facility in Houston and to double its advanced manufacturing fund may seem surprising. One could expect a tech giant to prioritize efficiency and cost-cutting through offshore production. Instead, Apple is prioritizing domestic manufacturing, which is often associated with higher operational costs, suggesting a strategic pivot to mitigate supply chain risks and enhance control over its operations. 4. Political context influencing corporate strategy. The investment announcement coincides with a time of heightened political scrutiny and potential tariffs on imports, particularly from China. While one might expect companies to shy away from political entanglements, Apple's strategy appears to be a proactive measure to align itself with U.S. economic interests and potentially shield itself from the adverse impacts of trade wars. This suggests that corporate strategies are increasingly being shaped by the political landscape, contradicting the traditional view of business as apolitical. 5. Emphasis on education and skills development. The establishment of the Apple Manufacturing Academy to train workers in AI and smart manufacturing techniques runs counter to the notion that tech companies are solely focused on immediate profitability. Instead, Apple is investing in the long-term development of a skilled workforce, indicating a recognition of the importance of human capital in maintaining technological leadership and innovation. 6. Large financial commitments despite market volatility. In an environment where tech stocks face market volatility and uncertain growth prospects, Apple's willingness to commit a substantial amount of capital, over $500 billion, to long-term initiatives may appear counterintuitive. It reflects a confidence in the U.S. economy's resilience and the potential for technological advancement, contrasting with a more cautious approach that many companies may adopt in uncertain economic times. 7. Renewable energy initiatives. Apple's plan to ensure that its new U.S. data centers are powered by 100% renewable energy challenges the standard assumption that tech companies primarily focus on profit maximization at the expense of environmental concerns. This strategic commitment to sustainability may reflect a broader shift in corporate priorities, where sustainability is integrated into the core business strategy rather than treated as an ancillary consideration. 8. Public relations versus actual impact. While some might view this massive investment as a public relations stunt amidst scrutiny over foreign manufacturing practices, the tangible commitments to job creation, skills training, and facility development suggest a deeper, more authentic commitment to the U.S. economy. This challenges the narrative that such announcements are merely for show, emphasizing that corporations can simultaneously pursue image management and genuine economic contribution. These counterintuitive aspects highlight a complex interplay between corporate strategy, economic conditions, political pressures, and social responsibilities, indicating that the landscape for global companies like Apple is more nuanced than traditional narratives might suggest. Apple's recent announcement of a $500 billion investment in the U.S. economy over the next 4 years is monumental and multifaceted. Yet some components may be overlooked by the general public despite their significant implications. Here we will highlight these key aspects and explain their importance. 1. Focus on AI and silicon engineering. While Apple's investment in AI and silicon engineering is broadly reported, the specific implications of these investments are often understated. The establishment of a 250,000 square foot server manufacturing facility in Houston, Texas to support Apple Intelligence is a crucial move. This facility will not only create jobs but also ensure that Apple has direct control over its AI infrastructure, which is vital for its competitive edge in the tech industry. Significance: as AI becomes increasingly integral to various sectors including healthcare, finance, and personal technology. Apple's commitment to building its AI capabilities domestically could set a precedent for other tech companies. This could lead to a significant shift in how AI is developed and managed in the U.S., emphasizing domestic production and potentially influencing regulations and standards in the industry. 2. Doubling the Advanced Manufacturing Fund. Apple's decision to double its U.S. Advanced Manufacturing Fund from $5 billion to $10 billion may not seem particularly groundbreaking on the surface, but its long-term impact could be profound. This fund is designed to support high-skilled manufacturing jobs and promote innovation across the country. Significance: this doubling is not merely about financial commitment but represents a strategic pivot towards enhancing the U.S. manufacturing ecosystem. By investing in advanced manufacturing, Apple is fostering innovation at the grassroots level, which could lead to new technologies and processes that benefit the entire industry. This initiative also aligns with national interests in revitalizing domestic manufacturing capabilities which have been eroded in recent decades. 3. Creation of the Apple Manufacturing Academy. The establishment of the Apple Manufacturing Academy in Detroit is a notable initiative that may be overlooked. This academy will provide training for small and medium-sized businesses in AI and smart manufacturing techniques, thereby equipping the workforce with critical skills for modern manufacturing. Significance: this initiative addresses the growing skills gap in the manufacturing sector, particularly in advanced technologies. By focusing on education and training, Apple not only invests in its supply chain but also contributes to the overall economic health of the communities it operates in. This could lead to a more skilled workforce ready to tackle the challenges of the future, thus benefiting both Apple and the broader economy. 4. Expansion of R&D investments. Apple's commitment to expanding its research and development capabilities is another critical aspect of its announcement that deserves more attention. With plans to hire around 20,000 employees primarily focused on R&D, silicon engineering, software development, and AI, Apple is positioning itself as a leader in innovation. Significance: this focus on R&D reflects a long-term strategy to maintain a competitive edge in rapidly evolving tech landscapes. Increased investment in R&D not only benefits Apple but also has ripple effects throughout the economy, fostering innovation in various sectors and potentially leading to breakthroughs that could redefine industries. 5. Environmental considerations. Apple's emphasis on energy efficiency in the new server manufacturing facility and its commitment to utilizing renewable energy sources are significant yet often overlooked elements of this investment strategy. The servers produced in Houston are designed to be energy efficient, reducing the overall energy demands of Apple's data centers, which already operate on 100% renewable energy. Significance: this commitment to sustainability is increasingly important in today's business environment where consumers and regulators are demanding greater accountability regarding environmental impact. By prioritizing energy efficiency and renewable energy, Apple not only enhances its corporate responsibility profile but also sets a standard for the industry, potentially influencing other companies to follow suit. 6. Strategic positioning against global competition. The timing and nature of Apple's investment can also be viewed through the lens of geopolitics and global competition. The investment comes amidst rising tensions and potential trade barriers, particularly concerning tariffs that could affect the tech industry. Significance: by strengthening its domestic capabilities, Apple is strategically positioning itself to mitigate risks associated with global supply chain disruptions. This proactive approach can enhance its resilience against international competition and supply chain vulnerabilities which have been brought to the forefront during recent global events, including the COVID-19 pandemic. Conclusion: Apple's $500 billion investment in the U.S. economy goes beyond mere financial figures. It reflects a comprehensive strategy that encompasses job creation, skills development, innovation, sustainability, and strategic positioning in a competitive landscape. The often overlooked aspects, such as the focus on AI and silicon engineering, the establishment of the Manufacturing Academy, and the doubling of the Advanced Manufacturing Fund, have far-reaching implications that not only benefit Apple but also the broader U.S. economy and its workforce. Understanding these nuances is crucial for appreciating the full impact of Apple's ambitious commitment. 1. Significant economic impact. Apple's commitment to invest over $500 billion in the U.S. over the next 4 years is unprecedented and marks its largest domestic investment to date. This initiative not only aims to enhance innovation and manufacturing within the U.S. but also seeks to create approximately 20,000 new jobs focused on research and development, R&D, silicon engineering, and artificial intelligence (AI). This substantial investment is expected to stimulate local economies, particularly in states like Texas and Michigan, and bolster the overall U.S. tech ecosystem. 2. Focus on advanced manufacturing and AI. A major portion of the investment is directed towards advanced manufacturing, which includes the establishment of a new manufacturing facility in Houston, Texas. This 250,000 square foot facility will produce servers for Apple Intelligence, which plays a critical role in Apple's AI and cloud computing strategies. By doubling its U.S. Advanced Manufacturing Fund from $5 billion to $10 billion, Apple aims to enhance domestic manufacturing capabilities and support skills development in emerging technologies such as AI and machine learning. 3. Educational and workforce development initiatives. The launch of the Apple Manufacturing Academy in Detroit is a key aspect of Apple's investment strategy. This academy will partner with educational institutions to provide training on AI and smart manufacturing techniques for small and medium-sized businesses. By equipping the workforce with essential skills, Apple is not only addressing the immediate needs of its production facilities but also fostering long-term growth and innovation within the American workforce, thereby enhancing the nation's competitive edge in technology. For strategic business positioning, Apple's investment comes at a time when the company is navigating complex geopolitical landscapes and potential tariffs. Analysts suggest that this move may also be a strategic response to previous political pressures, particularly from the Trump administration, to increase domestic production. By establishing a strong presence in the U.S. and diversifying its manufacturing strategy, Apple aims to mitigate risks associated with international supply chains and enhance its operational resilience in a rapidly changing global market. 1. Ford Motor Company's investment in the U.S. 2021. In a significant move to revitalize its manufacturing capabilities, Ford announced a $22 billion investment plan aimed at electric vehicle EV production and advanced technologies over several years. This plan included the establishment of new manufacturing facilities in Michigan and other states, focusing on creating tens of thousands of jobs and enhancing Ford's electric vehicle lineup. The investment was seen as a strategic pivot towards sustainable manufacturing and electrification, mirroring Apple's commitment to advanced manufacturing and job creation in the U.S. 2. Intel's $20 billion expansion in Arizona. 2021, Intel Corporation revealed plans to invest $20 billion to build 2 new chip manufacturing plants in Arizona. This investment aimed to boost domestic semiconductor production amidst a global chip shortage and was expected to create thousands of jobs in the region. Intel's expansion was part of a broader strategy to enhance U.S. manufacturing capabilities in technology. Much like Apple's recent commitment to expanding its silicon engineering and manufacturing initiatives in the U.S. 3. General Electric's $500 million investment in U.S. manufacturing. 2018, General Electric GE announced a $500 million investment to enhance its manufacturing capabilities in the U.S., particularly in advanced manufacturing technologies such as additive manufacturing and automation. This investment was aimed at modernizing GE's factories and creating new jobs in the advanced manufacturing sector. GE's commitment to innovation and job creation in the U.S. reflected a similar ethos to Apple's recent investment announcement, emphasizing the importance of advanced manufacturing and technological advancement. Future outlook: predictions for Apple's $500 billion commitment to the U.S. economy. Apple's ambitious $500 billion investment in the U.S. economy, announced on February 24, 2025, is set to have profound implications for the tech industry, labor market, and broader economic landscape. The focus on artificial intelligence, AI, silicon engineering, and advanced manufacturing not only underscores Apple's commitment to innovation but also positions the company to be a leader in the rapidly evolving technological arena. Here are several predictions regarding the potential impacts and developments stemming from this investment. 1. Revitalization of American manufacturing. With the establishment of a new server manufacturing facility in Houston and the doubling of its advanced manufacturing fund, Apple is poised to significantly enhance the domestic manufacturing landscape. This revitalization could lead to a renaissance in American manufacturing, encouraging other tech companies to follow suit. We may witness a shift in the global supply chain dynamics as more companies prioritize local production to mitigate risks associated with international dependencies. 2. Job creation and workforce development. The commitment to create approximately 20,000 new jobs, largely centered around R&D, AI, and silicon engineering, will not only enhance the job market but also facilitate the development of a highly skilled workforce. The Apple Manufacturing Academy in Detroit, aimed at training small and medium-sized businesses, could serve as a model for similar initiatives nationwide. This focus on skills development may lead to a more competitive and innovative workforce, addressing current skill gaps in the tech sector. 3. Advancements in AI and technology integration. Apple's focus on AI-powered systems, particularly through the production of servers for Apple Intelligence, is expected to accelerate advancements in AI applications across various sectors. As these technologies become integrated into daily operations, businesses could see significant improvements in efficiency, decision-making, and customer engagement. This may establish Apple as a key player in the AI landscape, potentially driving innovations in machine learning, computer vision, and natural language processing. 4. Boosting local economies. The investment is likely to stimulate local economies in the states where Apple is expanding its operations, particularly Texas, Arizona, and Michigan. The influx of jobs and development projects could lead to increased consumer spending, improved infrastructure, and enhanced community services. Additionally, partnerships with local universities and businesses could further embed Apple within these communities, fostering a strong ecosystem of innovation and collaboration. 5. Strengthening the supply chain resilience. By increasing its domestic manufacturing capabilities and investing in local suppliers, Apple is likely to strengthen the resilience of its supply chain. This move could serve as a blueprint for other companies looking to build more robust supply networks, especially in light of recent global supply chain disruptions. The emphasis on local production may also lead to shorter lead times and reduced costs. Enhancing operational efficiency. 6. Increased R&D investments and innovation cycles. With nearly doubled R&D spending in the U.S., Apple is expected to accelerate its innovation cycles. This could lead to the development of groundbreaking technologies and products, including advancements in custom silicon and AI applications. The ongoing investment in R&D may position Apple to maintain its competitive edge in the tech industry, enabling rapid responses to emerging trends and consumer demands. 7. Environmental and sustainability leadership. Apple's commitment to energy-efficient server designs and renewable energy usage is likely to reinforce its leadership in sustainability. As the company expands its infrastructure, we can expect further advancements in eco-friendly manufacturing processes and products. This focus on sustainability could inspire other companies to adopt similar practices. Contributing to broader environmental goals and corporate responsibility initiatives. 8. Geopolitical and economic implications. Apple's significant investment in the U.S. comes at a time of heightened geopolitical tensions and trade considerations. The strategic nature of this investment may provide Apple with leverage in discussions regarding tariffs and regulatory policies. This could lead to more favorable conditions for tech companies operating in the U.S. and influence governmental policies aimed at boosting domestic manufacturing and innovation. 9. Catalyzing competitor actions. Apple's massive investment may prompt other tech giants to re-evaluate their strategies regarding domestic investments in manufacturing. Companies like Google, Microsoft, and Amazon might accelerate their own initiatives to bolster US-based operations, leading to a potential arms race in domestic tech investments. This competitive landscape could yield benefits for consumers through enhanced innovation, lower prices, and improved services. 10. Long-term economic growth. Ultimately, Apple's investment is likely to contribute to long-term economic growth in the U.S. By fostering innovation, creating jobs, and enhancing manufacturing capabilities, Apple's initiatives could establish a more dynamic and competitive economy. This growth may not only benefit tech-related sectors but also have ripple effects across various industries, enhancing overall economic resilience. Conclusion. Apple's $500 billion commitment to the U.S. economy represents a pivotal moment for the tech industry and American manufacturing. The implications of this investment are vast, touching on job creation, technological advancements, and local economic revitalization. As Apple embarks on this ambitious journey, it will not only shape its own future but also influence the trajectory of the broader economic landscape in the years to come.